All right. What's up, everybody? Hope you're doing amazing. Welcome to our session this evening. I'm your host, Chuck Fulkerson. Hope you guys have all had an absolutely great trading day. Had a good day in the markets. We didn't have a whole lot of movement over the last couple of days, and so it's been, a little bit slower. Not a whole lot happening, but the purpose of tonight's session is really just to be an open forum. The idea with this session this evening is to really give everybody the opportunity to ask any questions that you want. I want to be able to ask any questions that you guys might have, or anything that you might think of as something that's maybe you're challenged with in your trading, or something that's not quite where you want it to be. And that's really what we want to do today, is just spend some time talking a little bit about that. So what I'd love to do, type in the chat box, say hello, let me know your name, let me know where you're from. Frankly, it also helps me to know that I can read the chats as they're coming in. So type in the chat box, and then also if you have a specific question that you want to ask, and maybe it's too long for the chat box, you can feel free to email it to support@tradersarmy.com. I'll put that up in the window so that if you've got any questions specific that you want to throw in, you can. Normally, I like to do these open forums with voice chat, but unfortunately, I don't have the ability to do that inside of the YouTube Live scenario. So we'll answer as many questions as we can as we go through here, and we'll try to get as many people in here as possible. Scott Gorman, good to have you. So, Mr. Corey, how are you, brother? Florida's coming in. We got Lily. What's up, Lily in Dallas? Greg, Bob, good to see you. Awesome. Well, thanks for coming. Really appreciate it. And really, I don't have a tremendous amount prepared this evening. Really, what I want to talk about more than anything is, what do we think about coming up in 2020, right? The purpose of this session to go for the next, I got about an hour set aside, but if you guys don't have a ton of questions on that, we'll I got a few things that we'll cover. But I think what's important is that we get through. It's uncertain times, right? We've got stuff going on in Iran. We've got stuff going on in the U.S. Economy. We've got, every day you read a new headline that says that the market is overcooked and that we are continuing to go higher, but there's warning on the horizon. Well, when are we done, right? When does the market stop going up? Well, the market tells us when it stops going up, because the way that it stops going up is that we start a new downtrend. So I'm going to switch my screen over to just looking at charts, and we're just gonna spend the rest of the evening kind of talking about charts. And the first question that I got comes in from Scott. He asked, do we trade nat gas? You don't see it in the morning videos. Scott, we actually don't cover it in the morning videos. And the reason I don't cover it in the morning videos is I just don't have that many traders that are trading it. It's actually on one of our pages. We do it in the live trade room every week. And frankly, the way we've done best with nat gas, we had a nice candle-to-candle long from our Sunday night room this week. The way we've done best in nat gas has really been playing the gap and go scenario. So if you've ever heard of the gap and go scenario, on the Sunday evening when there's a gap in natural gas, that has been really some of the best stuff that we've done. And some of the best stuff we've done has been with nat gas pretty much all year. It's actually one of them that we do pretty regularly. So if you've got a specific question about it, please make sure that you ask. Hey, Zach from Florida. Awesome. Glad to have you here with us. 17-year-old up-and-coming trader. You know what? There's nothing better in the world than being 17 and having the ability to get in there and trade. That is awesome. So stick with it. If you ever have questions or anything I can ever help with, please make sure that you reach out. So VCAS, that's a great question. So not seeing any evidence of a slowdown, how do you position ourselves to profit from a rise in equities? And that's a really great question, because that's one of the things I think it's important to start with. So one of the things you'll hear me refer to is I refer to what are called fair price value areas more than anything. Fair price value areas. And a fair price value area is really an area. And I will tell you, there's a lot of really good trading books out there that a lot of people have become very familiar with. The one that I have used the most is called Price Action Breakdown by Laurent Demir. Talks a lot about fair price value areas, which are a little bit different than just pure supply and demand. What fair price value areas tell us is, more than anything, they tell us about the fact that price has memory, right? What they really tell us is that price has memory associated with it. So let me kind of tell you what I mean by that point. I'm going to draw it out, and then I am going to get to your question that you asked earlier about how to profit from these markets, because it comes back to that fair price value areas. So looking at price. So let's say that we have a market that looks something like this, and we have an area where we see that price has hit what we would consider a supply area. So let me kind of draw out what I would consider a supply zone right up in here. So we have an area that might be considered a supply zone, and I guess I didn't quite make this green one high enough. But we come into a supply zone like this, and we see price move away from it, right? And that's a reversal trade. We then see price maybe trade into it again, and that's yet another reversal trade. Well, these are reversal strategies, and a reversal trade means, well, I'm looking to get short when the market's going up, or I'm looking to get long when the market's going down. I'm looking to trade the reversal. But when we come up into an area like this, what we're doing is we're eating through all of the unfilled orders, where those orders used to be. And so oftentimes what we'll see is price will then pop through one of these levels. Now, this is a breakout trade. How many of you out there are breakout style traders? Let me know if you are a breakout style trader. Let me know in the comment section. It's really good to kind of hear how many of you out there have traded breakouts, because I know that there are a number of traders and education firms and the like that just don't believe in trading breakouts for the most part, right? They just say, well, breakouts just are not a profitable strategy, just only trade reversals. And I don't agree with that. I think that there is oftentimes a lot of reason to trade breakouts. But let's say we get a breakout that looks like this. So my question now becomes, what do these tops now mean, right? So the thing that we have to ask ourselves next is, what do these tops now mean? Well, these tops that used to be areas of resistance or areas of supply. Yes, I can turn the volume up a bit. Thanks, Red. Glad you're able to join us, by the way, Red. Long time no see, man. All right, is that better? Hopefully that should be a bit better with the microphone. So when we see this kind of an area where we've popped up above those areas, what happens with those tops? Well, those tops are not dead, because price still has memory. And oftentimes we will see that this area is still a valid area, and in fact becomes a bit of a reversal point when price comes back into there. Now, so what happens is it turns a reversal trade, then oftentimes becomes a breakout, and then that old area becomes the origin of yet another reversal position, right? And so this oftentimes becomes a new reversal period. Now, why is that? Well, now what we'll see oftentimes is that levels like that, oops, that's not what I meant to do. Now what we'll see oftentimes is that levels like that will still be valid for a few turns, and what we'll start to see is that price will kind of just live around this area for a while. And this is oftentimes what happens in sideways price actions. And so this position right here that we talked about, you see that price comes back and hits it again and again and again. And so this is an area that the market is that the market is gravitating towards, because the market believes this is a fair price value area. Now, what time frame is that on? That, to me, that happens on 60-minute charts and above. I don't really want to do that inside of like 5-minute charts, but 60-minute charts and above. So, going back to the question that, let's see, I think that was, who asked that? VCast had asked us earlier, was how do we trade in a market that's just not showing me any weakness whatsoever, right? Well, take a look at what we're setting up right now. This market had, we've hit this once, we've hit it again, moved away, we've now hit it again, and moved away, and so since we've hit this a couple of times and moved away, this is a fair price value area. Now take a look at the last fair price value area, right? Look at this level that we had right in here. All right, we hit it, we based, we got a little move, we retested it, chopped around a lot, got a little move away. Now, if you go back to the one prior to that, you'll see that we had this one, which was our fair price value area. So these fair price value areas, just because we're at all-time highs, that we don't necessarily want to, I guess the word would be, fall away from. A lot of times when people say, well, we've broken a level, so that means this can't mean anything in the past. I know that when I first started trading, I was told by a number of people, don't cut through candles. Anybody ever hear that one? Don't cut through candles. Well, I actually vehemently disagree with that. I'm going to... Corey, I love that you put that in there. Trade what the market tells you to trade, not your opinion. That's a great point. I want to cut through candles. If the market tells me that there's a historical area back here, and I've got the opportunity to lean on that historical area, that's what I want to be able to do. So in a market like this, I'm going to look for breakout trades around all-time highs. And when I get quality breakout trades around all-time highs, I'm going to let them run. I'll run those trades until I've gotten a little bit of a profit potential in there. Once I've gotten the profit potential in there, then as we get a bit of a pullback, you oftentimes will get a retest at that area. You'll very oftentimes get a retest at that area, giving you a strong entry opportunity. And that's the best way I have found to trade all-time highs. Now, what about shorting against those all-time highs? Right? Shorting against those all-time highs is a little bit more scary, right? I don't necessarily want to think about shorting against those all-time highs. Shorting against those all-time highs is really the thing that I worry about, right? Because if you're shorting against all-time highs, then you are really, 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 what's the word I want to use? Well, it's like the joke I always say is it's like tugging on Superman's cape. It's like spitting into the wind. It's just don't short the all-time high. Now, if we get some sort of a reversal that gives me a quality breakdown setup where I can trade a breakdown, then I'm okay doing it. So that's my thoughts overall on kind of what we're looking at. Let me see if I can't get the next question in order. I'm trying to get as many of them in order. So let's see. Scott asked what I mean by candle to candle. I'm going to come back to that one, Scott, because I think that's a good one. Navid, is that Navid? I hope it's Navid, is asking, besides supply and demand, do you use volume profiling like most traders on Twitters do? Yes, this will be recorded. Do I use volume profile? So occasionally I will use, you will see me use the volume profile to see where are the big areas where we've seen a lot of price changing hand. And so I will oftentimes pull that up. I will oftentimes look at that to see, okay, where is my extreme amount of volume that I can lean on when price comes back into that area? And that's what I'm looking for. Is do I see that kind of an area? And so if you notice here, I've got a little candle to candle area zone set up in here, primarily because this is not a very clean level. And the fact that it's not a very clean level means that I am not just going to go long as soon as price comes into this zone. But what makes me a little bit more confident about this zone is it's a fair price value area. It's formed at a quality time of day right around U.S. market open, and I've got volume profile supporting a turn at that level. So will volume profile make my decision? Absolutely not. Volume profile is not going to make my decision. However, volume profile is going to help to confirm a decision, which the supply and demand and fair price value areas have gotten for me. So that's where I would go with that. Let's see. I still have the candle to candle one on my list. Red Trader asked a question around working full-time. Want to try my luck in the stock market. Good strategy to start with so I can leave my full-time job in a few months. Well, Red and Mike, who's kind of he's the other co-founder here and really the back end does an amazing job for us. He answered a lot of questions, but you talked about if I had 3 to 4 hours, if you put 3 to 4 hours every day, how many months would it take to be profitable? Here's my thoughts. There's no substitute for time. There's no substitute for putting in the time, and it's not even so much the number of hours you put in as the number of trades, Red. It's the number of trades that are more important than the number of hours. Matter of fact, I have found that trading is not something that I can do 3 to 4 hours a day. What I would look for is that I care more about the repetitions I get for quality trades in good levels. So when I'm looking for quality trades in good levels, I want to identify that not so much by time I spend, but more by the amount of candlesticks I can see, repetition in trades that I can get in front of. So that's the first thing I would say. Second thing I would say is that you have to have, and I like that Mike put it in there, a very clean and simple set of rules in order to lean on and follow. Because if you get, there are so many, you could spend quite literally. I mean, I could very easily point you to 3 or 4 education arms where you could spend over $100,000 learning how to be a trader. And between 3 or 4 different companies, you can sign up for every newsletter in the books. You can have every guru on the planet telling you what to do. But if you don't manage your risk appropriately, none of it will matter. And the only way to learn how to manage risk appropriately is to actually place trades. So here's what I would say first and foremost. The first thing to do is to start looking at charts on a very regular basis. I don't know that you'd want to do 3 to 4 hours a day. I'm not sure what time zone you're on, Red. But this answers another question about what time do you normally trade, and do you trade futures in pre-market hours? I live in the central time zone, and the central time zone allows me to look at the markets from 5:30 a.m. to about 8 a.m. That's really my sweet spot. That's when I want to be looking at the markets and identifying most of my areas and most of my opportunities. Matter of fact, I will place most of my trades before the market ever opens. Now, it doesn't mean that I don't place trades when the market opens, but if you notice, I have alerts set up quite frequently. I am not a believer in true set it and forget it style of trading. I think that set it and forget it style of trading is dangerous. I think that how price arrives to a level is important, and so I'm a big believer in alert it and set it. Set an alert around the area, and then look at how it's arriving to that zone to see if I want to get in. So that's a roundabout way for me saying that everybody's going to be different as far as becoming a profitable regular trader, and you have to be able to follow a very strict set of rules. So are you hiring? Listen, Naveed, the last thing I want is employees. I can guarantee you that. All right. Next question that I said that I would get to. So hopefully, Red, that answers your question. And if you and genuinely, and I mean this with all sincerity, if you have because that's something that I think is a very important and personal conversation. If you want to call me, If you want to send us an email with your phone number, I will call you and speak to you directly and answer any questions that you want, because that's a big one. So, let's see. Question was, and I see a couple of you guys talking a little bit about the volume bars, so I'll talk to that in a moment. Hello, Doug. Timeframes do you use to mark fair price value areas, which goes back to another question somebody asked about timeframes and even about this volume profile. I primarily will mark timeframes on 60-minute charts. I'm a big believer in 60-minute charts. I don't like to go down to 5-minute charts. I think that 5-minute charts, when I go down to a 5-minute chart, it's just, frankly, too damn hard. It's just too hard to trade a 5-minute time period. I want to trade a 15-minute charts at the lowest 15 minutes. And so what you'll notice when you guys, those of you that watch the daily market commentary every day, or those of you that are in our Traders Army live trade rooms, I tend to use purple lines to mark 15-minute levels, and I use green lines to mark 60-minute levels, and I use blue lines for breakouts. Now, why do I do that? I do that so I can quickly identify any trade or any level that I'm looking at. So, for example, looking at this ZN trade, I know for certain that this was a potential breakout level. And we'll talk a little bit about this breakout because it gave me a breakout and then it just kind of did nothing. Although technically wouldn't have stopped me out because it didn't get below the pivot. It's just dead. But I know that this is a 15-minute level because it's a purple mark. So if I go to a 15-minute chart, I can see, okay, well, I chose this little area down here to be the formation of that 15-minute level. Okay? That's the level that I would kind of look for in here. Is this is where that turning point would be. Now, that's on a 15-minute chart. So for me, the way I'm a huge believer is I start everything with the 4-hour. And so this will answer a good question of, Phil, do you have a simple beginner rules to build on? Phil, it all starts with trend, right? So I start with the 4-hour chart. The 4-hour chart is what gives me my trend direction. I determine everything I want to do on the 4-hour. So in this case, I've got gold in a 4-hour upward trend. We've changed our trend direction because now I have higher swing highs and higher swing lows. That trend direction recently changed. I was looking at this as a potential breakdown today. Didn't occur, and we popped up above there. I'm sorry, that's the 1-hour. Hold on. There we go. So on my 4-hour, we're starting to really, bring this thing back up. That's where I start with this trend. Then I go and identify my levels on the 1-hour. That's the key. That's the most important thing, is identifying trend and then moving down to the right time frame is the piece that I would go. Now, the other side that I don't have on here that I would really go into, and I don't really have it in this, I don't have it open or prepared and to talk about, but inside at Traders Army, one of the things that we do is we actually have a top performing trade scoring sheet. So it's a TOP, trade optimization plan. So what we do is we look at each level and we try to score each level on a scale of 1 to 10 to let us know what do we think the probability of this trade working. And then that tells me whether I'm going to look at a limit order or whether I'm going to look at a confirmation order. Or I'm not going to take a trade at all, right? So, for example, this one here switched to a confirmation level. I can tell because it's a dashed line, so it's lower probability. Okay? Bob 180, never mind. Oh, maybe you're trying to type into your window. No, so a couple of you are asking questions about volume spike below the CDC was formed after hours. How can so much volume be there? Am I reading the volume profile wrong? No, VCast, you're reading it totally correct. And so let me pull it up here real quick. I think you were looking at the ES when I had the volume profile up. And you're talking about this one right here, I would imagine. And that volume profile is from that bombing in Iran. So when Iran launched missiles at the U.S., that was where we saw that huge V bottom where the professionals just gobbled up all the money they could down there. So The professionals just gobbled up all the money they could in that level and were able to kind of absorb it. So now I want to answer the question on candle to candle because I think this is a good time to answer it because we just talked about the probability of a quality level. Okay, so here's the way when I see a level, and once again I'm not going to go into the scoring piece here, but one of the things that I think is key is you've got a structure that you follow for scoring a zone, and when we score a zone, we score it on a scale of 1 to 10 essentially. And if it scores a 9 or a 10, I will use a limit entry, right? So if it's a great level, I'll use a limit entry. And if it's kind of a middle of the road, I'll use a confirmation entry. And then if it's a little bit below that, I typically will do no entry. However, sometimes I'm going to see price come into an area that just looks like an area where it should be reversing, right? Where it looks like it should be reversing, and it just doesn't have a clean level to lean on. So let me give you an example of that. So an example of that might be, let me go to an equity for a minute. Let's go to, I got a good one. Let's go to Tesla. I know, I'm sure all of you out there are going to tell me you've been long Tesla since 200, blah, blah, blah. No, I'm just kidding. I will say I got egg on my face on Tesla because I believe I was shorting Tesla every chance I had until here, and then all of a sudden it decided to totally give me the once over. But anyway, when I look at Tesla, let's just say theoretically that we look at Tesla and we say that, you know, there's a gap fill area in here, and we're pretty sure that this is a place where we can see a turning point. But I don't have a clean demand area down there. But we're just looking at it, looking at this saying, you know, this is an area where I anticipate it's 450. 450 is a whole round number. We anticipate price getting into that level. So what we might do in that case is we might use a candle to candle trading style. Now, when I say a candle to candle trading style, what I specifically mean is that I might look for a trade that says, you know, I think that I'm willing to get long here. However, I'm not willing to get long without having something to tell me that there's probability, right? So let's say that I have price looking something like that. Price going up, going up, going up. And we get this huge rocket up. And let's just say that somewhere right in here is my 450. And as price comes down, especially if I get something that looks like this, I get a doji at my reversal area. So when I get a doji at my reversal area, there I might look and say, you know what? I'm going to get long if we get above here. Now, if we get above there, my stop is going to go right here. So the next candlestick that we get goes like this. Am I in the trade yet? Absolutely not. Next candlestick looks like this. I'm now in the trade, and my stop has to move. So in this case, my stop now has to move. I can't use that one anymore. My stop's going to be under this candle. And then as price continues to move up, I'm going to continue. Let's say we get another candle that looks like this. I take my stop the next day and move it up to here. This is called candle-to-candle trading. It's very, very active management inside of our trade feed. But that, I think, is something that a lot of traders are afraid to do. Now, this works really well on daily charts, weekly charts, and as low as 60-minute charts. So 240, daily, weekly, and 60. I would not go lower than 60 on a candle-to-candle style. Now, so candle-to-candle styles, they work well with candlestick reversal patterns. So when I have a candlestick reversal pattern in an area like a whole round number or oftentimes it's even a 50% fib retracement where there is an opportunity to get in, right? A reason for me to get in. And then I want to let it run for the bigger picture. Now, once it's moved a little bit, you may stop moving that candle, that stop on every candlestick. You may want to just let it continue to run, especially once you're into a free trade stop. So hopefully that answers your question on that one as far as how they go. Now, one thing I do want to point out is that if you want to watch a class on candle-to-candle trading, if you go to TradersArmy.com, underneath free trading videos, so TradersArmy.com, learn, you will see on-demand courses. We've got a bunch of free trading videos, and underneath these free trading videos, number one is candle-to-candle trading. So there's a lot. There's probably, 20 hours worth of content between here on the free trading videos and some of the other stuff that we have just for being a free member of the site. So go on and watch those if you want to, and hopefully that'll give you some of the ideas on kind of what we use. Okay? Let's see. I'm trying to make sure I got everybody's questions. How do you... Oh, thanks, Zach. How do you add the pinned trend line, rectangle, price on the above area? This area right up in here, I think I used this... Oh, there it is. There's a little pin right there. So you can use this little pin to leave it always on top or to take it off, and then I adjust it with this configure button area here. So you can change it with that configure button area right in that piece. Zach, can you explain confirmation entries? Oh yeah, so this is good stuff. So when we look at entry types, there's limit entries and confirmation entries. Limit order means just get me in as soon as it touches the level, right? So let's pick a stock. I'm gonna pick. I don't want to do Tesla, but let's pick. IBM. Let's pick IBM. All right. So I'm looking at IBM now. In IBM, which is putting in some really nice selling pressure at the moment. Not a recommendation, just an observation on the technical analysis side. But in IBM, we have a gap fill supply area right here. And if I'm not mistaken, Mike, is this one of them that's on our trade feed at the moment? That's on our trade worksheet? I don't remember if it is or not. So in IBM, we look at a level that looks like this. Now, in the level that looks like this, we have this would be a limit entry. And a limit entry would mean I'm going to get short as soon as it touches this area. I'm going to get short as soon as it touches this area because I think that this is the area where we will see the best reversal and the best bang for our buck. And as soon as we touch it, we're in. That's called a limit entry. What a confirmation entry says is I don't know for sure that we are going to get in on this. I want to I don't feel like it's as high a probability. So in a confirmation entry, I always use dashed lines. The way we trade those, let me zoom in on this, is essentially what we say is if the stock trades halfway into the level. So let me change the color on this. So let's say that the stock has to trade to 142.62. That then activates the trade. Okay? So 142.62 activates the trade. I am not in the trade until we get below the zone. So I'm going to put up something I can draw on. So 142.62, we would say if price comes up into here and does this, we're not in the trade. We just missed out. We missed out on the position because we did a confirmation entry, and sometimes that happens. Sometimes we'll see this happen, where price comes into the level, does this, and then shoots up. In this case, did we get into the trade? No, we did not get into the trade because price has to come out of the level for me to get into the trade. So this would be a non-fill. Matter of fact, once we get above the zone, we would cancel the order. Now, well, how do we how do we get into a trade then? Well, the market has to come into the level, touch the zone, and then we enter the trade here as it comes out of the level. That's how we use these orders. Now, there's a couple of ways to do it. You can use a conditional order. At the confirmation level, and then a stop limit order to enter the trade. You would then have a stop market order as your stop loss, right? And then you would also have a limit order as your target. And those three things together is really how you would build that trade. The question is, does it have to close below? It does not have to necessarily close below the level for me to get into that trade. Does not necessarily have to close below the level for me to get into that trade. And so that's how we use those conditional or confirmation entries when we get into those positions. Okay? So hopefully that makes sense to everybody. And when I'm looking at those, let me go look and see some of them we may have on at the moment. So one of the things that we do for Traders Army members is we actually have trade updates. So all the trades that we do in the daily market commentary, we put updates throughout the day, but we also have this trade worksheet. So I want to pull up a trade that we have in the trade worksheet. So for example, here's one in CME. So in CME, we have a long reversal trade set up, entry, stop, and target. And when I pull this thing up, on this CME trade, we can see that we have a zone here where we're looking for price to return, right? So in this area, we would look for price to come down into this zone. This is a limit entry, and it's a limit entry because a couple of reasons. First of all, it's a strong move away from the level off the hourly chart. It's a former area of resistance where we had seen that it was in here, and then we have we've got a stop loss down below, and then we've also got a picture of the risk graph for the options trade that we would build on this kind of thing, right? So this is an example of a limit entry. An example of a confirmation entry would be something like our crude oil setup, which I mentioned a little bit earlier. And this is a confirmation entry because we're only going to get short if we come up into here and then come back out of the level, right? We've got to come up into here and then come back down out of the level. That's the only way that we would get in. Now, why is this a confirmation entry? Because this had a strong move away. Well, it's a confirmation entry because we came close to the level, but we were not able to get filled, right? So it's a confirmation entry because we came close to the level, but we were not able to get filled. And that, I think, is really the biggest difference that we look for in there. So those are some of the fundamental things that I look for on a day in and day out basis. What I want to do now, I'm going to go through just some big picture ideas of the market overall, give you kind of my thoughts on what I'm looking at on some of the bigger picture things in the, and I know that on the daily market commentary, which you guys can watch every day, I do very much, short-term trading. I want to look a little bit bigger picture, give you some ideas. And then what I want you to do is if you've got a couple of securities you'd like me to look at, we have just enough time for me to look at some individual securities that you guys might want me to look at, and I can go through some individual securities from a technical analysis point of view. It is not a recommendation to buy or sell in any way, but I want you to get your thoughts on there as well. So really quickly, I want to just highlight if you're interested in learning more about TradersArmy, feel free, if you're not already a subscriber. If you want to go and just get a free membership, you can watch all of our all of our free content. If you want to pursue and think about membership, we've actually got a really good promo, $20 for your first month. $20.20 for the beginning of 2020. So if you're interested, please go in there. We try. We've got text support set up. We've got 2 live trade rooms a week. We've got the traders worksheet. We've got open forums once every 2 weeks. So it's really a vibrant community of traders that we're trying to really build and make it as the best that we can. If you want to learn more, please feel free to email us. And if you want to hop on the phone with me, then let's hop on the phone and talk about it if it's something that interests you. So I want to at least make that quick call. And if you're interested, give it a shot. I mean, heck, it's $20. We've had a lot of people that have taken a lot of education in a lot of other places that come on board with TradersArmy because they really, really enjoy the camaraderie and the team that we're kind of building. So, all right, let me get back to talking a little bit about some of the levels. But Lily asked a great question. Can I elaborate more on your most used breakout strategy? So, yeah, Lily, that's a great question. I really think of breakout strategies as the same thing as reversal strategies, right? And I can't dive too deep into it because I have an entire hour and a half long lesson essentially on that, and we come into it a bunch. But when I look at a breakout, for me, the rules of a breakout strategy are very simple. A breakout has to have a couple of things in order to be an effective breakout. When I look at a breakout, first of all, it has to have multiple touches. Multiple touches. It has to have basing before the breakout, and it has to have room to roam. Okay, so what I mean by room to roam is I don't want to do a breakout that is just coming into supply. So let's say that I've got a supply level right here, right? So similar to the picture that I drew a bit earlier. Let's say that I have a really nice supply area right here. Quality zone that we're kind of considering and coming into on this level. Price looks into this zone. We tap it once. Oops, that's not what I wanted to do. We tap it once. We tap it again. I got multiple touches. Now, oftentimes this is gonna create something like an ascending triangle pattern, right? This is what I look to see. So I look to see multiple touches, and ideally I'm going to see some basing before a breakout. Now, here's the key though. I can't have a supply level right here because a supply level right here would not give me enough room to roam because this would be my profit margin against a risk of this. Right? So it wouldn't give me enough room to roam. And those 3 things are what I need to have. I need to have multiple touches, basing, and room to roam, whether it's a breakout to the upside or a breakout to the downside. Now, this is especially effective when I've got an equity at an all-time high. When I have an equity at an all-time high, or at an all-time low for that matter, this becomes especially effective. And so it's not, as one of our former presidents once said, it's not rocket surgery, people. I'm not the sharpest tool in the shed, and so I don't try to get the overly complicated, and I don't use any indicators. I really, really want to lean on the price action. So hopefully that answers your question, Lily, and makes some sense. Let's see, NWBI, so that's a security you want me to look at. I will look at that one. Let me answer Alex's question first real quick. And then if anybody else has any particular securities you want me to look at, please put them in the chat window as well. So Alex says, about gap and go, what triggers the trade and where do you place the stop if you do? very simple on a gap and go. And so let me give you an example. We do this. This is our most popular trade room. We do our trade rooms on Sunday night and Thursday mornings. So Sunday night and Thursday mornings are when we do our live trade rooms. And the reason that we do Sunday night is because Sunday night is when the futures market opens. And so since the futures market opens on Sunday night, we typically get a lot of really good opportunities. And so Sunday evenings are a great opportunity to look for gap and go scenarios. So let's look at this week in the Great British Pound. So this week in the Great British Pound, we had a gap down. Now that gap down told me that this is an opportunity for a gap and go. Anytime I get a gap in the futures market, I've got an opportunity for a gap and go. There's a couple other criteria that I want to make sure of, but for the most part, my entry is a short below here. My stop is above the first candle's high. That's it. Super easy. No magic to it. And so now, once I get a 2-to-1 reward to risk, I'm willing to take a little money off the table. A 3-to-1 is even better. This one provided about a 4-to-1 reward to risk in the overnight session. So this is one that we picked up on this week's live trade room. It was a very simple gap and go scenario, allowing somebody to take advantage of a good little reward to risk scenario on that trade. Now, that level then became a supply zone, which, oh, by the way, we retested again last night and got a nice little move away. So now we don't have an area at the moment. Now we've wrapped our lines around this zone. My problem with it at this point is we're kind of basing a little bit in front of it. And so with the basing, we're getting in front of the zone. I'm shifting this over to a confirmation entry so that I know, kind of what to do with it. So while I'm actually here, I'm going to throw in my alert. So that's how I set the trade up, is that I essentially will set up an alert for when we get into this level. It gives me a little bit of time to place the trade and set myself up, because I'm using hourly charts, right? I'm not using a 2-minute chart where I'm going to run out of time to place the trade and to kind of set that thing up. Yeah, I would. Yeah, Bob. For me, that's a 60-minute minimum. That's a 60-minute minimum. Yeah, and Scott, it does look like that gap fill, but that's what I said. It's a confirmation because we're kind of basing below the level, right? I've got to look at where's my opposing fair price value area. And to me, my opposing zone is right here. So that leaves me with less than a 2-to-1 reward to risk. So I've really got to be cautious on a position like that. So, and real quick, that's why I'm gonna pull up the calendar here real quick. These are the different live trade rooms and all that throughout the week. That's why we do the live trade room on Sunday night. If you're not trading on Sunday nights, you're missing an opportunity. You want to trade on Sunday nights as often as you can. Sunday nights and Thursday mornings, I've found, have been the most effective time for trading in the futures markets overall. All right. So let me talk a little bit about big picture markets and kind of my thoughts heading into this later on this year and kind of what we're looking at, and then I'll go talk about some individual stocks that you guys want to look at. Starting with the major market comparison. Now, I start every class essentially with a major market comparison. So yes, PB, the alert is set to ping my phone. I got it set up on my phone so that I can get the notifications. That's on Thinkorswim. It's exactly why you do it. Yeah, Scott, I'll talk about that in just a moment. So what I'm looking for in these markets is I really look at what are they doing compared to one another. And what we're looking at now is a 1-year chart. So we're looking at a 1-year chart. Now, I'm not really care so much about the chart. I care about the percentage change. The RUT is up 16.4%. The NASDAQ's up 35% over the last year. The S&P 26, the Dow's up 20. I mean, it's just been a banner year, right? I mean, it's been a ridiculously banner year. And this is why, as investors, sometimes people say, well, what's the best way to beat the market? Well, first of all, buy the spiders and sell options against it as you continue to rise up, because it's just, you got 26% in the SP last year. So, but notice the Russell's only 16. Well, that's over a full year. Let's look at the last quarter. So the last 90 days. So when I go down and look at the last 90 days. So over the last 90 days, the Russell's up 11%. The NASDAQ's up 15. The S&P's up 10. The Dow's up 8. I don't really see a lot of cohesiveness. What I want to see in order for me to see trend continuation is I want to see the Russell up the most, followed by the NASDAQ, followed by the S&P, followed by the Dow. That is a signal of normal market behavior, and that's because the Russell is my highest beta stocks, right? So let's look at the last month. 20 days, 15 minutes. Now, when I look at the last month, what do we notice? Matter of fact, the Russell is the laggard. It's only up 1.86%. The NASDAQ's up the most at 5.57. The S&P's up 3. The Dow's only up 2. When I look at the last week, so let's go all the way now down to the last week. Looking at the last week, the Russell is still the laggard. So what is that telling me? Well, that's telling me right now, what it's telling me is that we're seeing that the market doesn't have a huge appetite for small cap risk. And since it doesn't have a huge appetite for small cap risk, I want to be aware of that. I want to be aware of the fact that what the market is telling me is, listen, we're not overly comfortable with all of the unknowns out there. So do we want to truly be heavily invested in illiquid securities? And the Russell stocks are not going to be as liquid as those in the Dow. So if we see that now, the NASDAQ is still up the second most, so we haven't seen much of a turnover, but we got to remember the NASDAQ, 43% of the NASDAQ is controlled by 5 stocks: Apple, Microsoft, Google, Facebook, and Amazon. 43% of the NASDAQ is controlled by 5 stocks. Those same 5 stocks make up less than 13% of the S&P. So the NASDAQ has been, we'll call it, propelled higher by stocks like Apple, right? I mean, Apple had a nice reversal day on Friday, but it didn't follow through. But Apple has had a big run up. Microsoft, which is the second largest stock in the S&P or in the NASDAQ, big run up, still continuing its upward move. Google, big run up. They're all straight up, but we are seeing a loss of momentum in all of them. So my anticipation, call it what it is, it's my genuine belief is that we will see a bit of a slowdown. We will see the markets take a bit of a breather. Do I think it's going to take a bit of a breather to the tune of 20 or 30%? Heck no. I'd be nuts to say that. I don't think it's going to take a bit of a breather to the tune of 20 or 30%. However, would I be surprised to see the S&P 500 pull back to a more comfortable level, right? So when I look at a daily chart of the S&P, boy, does this level of demand here look enticing. This level of demand right here, whole round number, it's a fair price value area. It's a beautiful area for a bit of a pullback. And the other side is that if we let's say we pull back from 33.50 down to 30.50. That's 300 points. That's a pretty steep pullback overall, but it's less than 10%, right? It's less than a 10% pullback in a market that's rallied up 30% in the last year. Not unheard of. Now, in order to do that, we've got a couple of other demand areas that we'd have to get through that are all clean demand pullback zones. So in my mind, there's no reason to look to short the S&P at all. However, if we do start to come down on a small time frame, This is the number that I'm really looking at for stronger reversals. Now, I'm not going to be able to pin that exactly into that zone, and it may go a little bit below there, a little bit above there, reverse. But even on a weekly chart, that's what makes the most sense for a bit of a pullback. If I throw my Bollinger Bands on here, which talk a little bit about my overextended market, you can see we're riding 2 standard deviations above the norm and have been for quite a while. If we look at the last time the market rode 2 standard deviations above the norm for this long, right? If you look at this here, it was back in this region, right? Right back in this region where we ran 2 standard deviations above the norm for a really long time. Look at it before that. We ran 2 standard deviations above the norm for quite a while. Typically, those are marked by snap back, strong moves back down. Do those strong moves back down change our trend? Not always. This one actually did change our trend for a brief period of time. But those strong snapbacks are designed to pull us back as a reversion to the mean. And that's typically what we'll see that they do. So I wouldn't be surprised to see us get a bit of a pullback down into here. Now, if we get a pullback down into this region, by that time, the mean in price will have come back down a little bit, and maybe we will have seen that this mean in price is about where this demand area would be. So now, do I know when that's going to happen? Not necessarily, but I'm going to keep an eye on a candle-to-candle style on a weekly chart to tell me when I might want to consider getting short if I want to play it down, or at the very least, getting big, heavy, long back in. So, Scott, I want to answer your question real quick on the 6 candles because it was a really good question. The 6 candle rule for us is very simple. If I get into a trade and it doesn't start going my way within 6 candlesticks, I'm out of the trade. So, for example, let's say I'm looking at this SPX level. Let me remove this one and just put this area right here. If price comes down into this level and I get 1, 2, 3, 4, 5, 6 candles, and after 6 candles, I'm right here, I'm going to move that stop to break even because I don't think it's going to move my way. If I get 6 candles and I'm still in here, I'm probably going to close the trade out and just get out of the position. So if it's not moved my way in 6 candles, it's probably not going to move my way. My mentor once said, if she hasn't winked at you by 11, she's not going to wink at you. Go to bed. So, I look at it a little bit like that. I want to be able to when I'm right, I want to be right quickly. And when I'm wrong, I want to get out and not sit around to be proven wrong. I want to get out before I get proven wrong. So hopefully that answers your question, Scott. And if you've got any more specific questions, please send me an email. And anybody, by the way, if you want to get on the phone and chat, like I said, whether you're a subscriber or not, I want to make sure I can help as many people as I can. So give us a call. I'll gladly hop on the phone with you. Shoot us an email, support@tradersarmy.com. I'll do whatever I can to kind of help you. Once again, if you're interested, I'd love to, come try us out. See if you are, would be interested in becoming a, yes, Scott, in this example, it would be 6 hours. On a 15-minute chart, it would be an hour and 30 minutes, right? It would be 6 15-minute candles. So it's going to be whatever the candlestick is. So anyway, so if you guys are interested in coming on board Traders Army, I'd love to come on board. It's going to be $20.20 for the first month. So you can come in, see what it's like, and hopefully you'll gather enough intel in that month to realize that it makes sense to hang around. We've got a lot of subscribers that have been with us quite literally since the day we launched, and couldn't be happier of the community we're building, and frankly, just a lot of really great friends that we get together as friends on Thursday mornings and Sunday nights, and I absolutely love it. So thank you guys for joining me this evening. If there's anything I can do, please don't hesitate to shoot us an email. If this wasn't YouTube Live, I'd throw my phone number in, but frankly, it's YouTube. I'm not putting my phone number in on YouTube. So hope you guys all have an absolutely amazing day. Appreciate you all joining us today, and thanks so much for coming in. Have a good one. I'll see you.